Hello, this is Brian Head. I was just on the root of all success with the real Jason Duncan. If you're looking to listen to a show where you're going to have some real conversations, talking about some really real things to help you learn how to succeed as an entrepreneur, this is definitely the show for you.
Welcome to the root of all success with the real Jason Duncan. A podcast that explores how the world's most powerful entrepreneurs unlocked success and how their stories can help you do the same. A successful educator turned entrepreneur, Jason has built multi-million-dollar businesses that have been featured in Inc. magazine and Entrepreneur magazine. His life's mission now is helping entrepreneurs live what he calls #the exit lifestyle. Introducing TEDx speaker, mastermind leader, author, entrepreneur, cigar aficionado, motorcycle enthusiast, and host of The Root of All Success, the real Jason Duncan. The real Jason Duncan.
Welcome back to another episode. I am your host, the real Jason Duncan. Glad that you're here today. I got a guy today. His name is Brian Head, who is my guest on the show today. The cool thing about doing podcasts and being connected with people through this industry of podcasting is you meet some interesting and fascinating, successful people that you wouldn't have otherwise ran across in normal life. And Brian Head is one of these guys. He and I were introduced through a mutual contact that we have. I work with him on some marketing stuff. He works with them on some podcasting stuff. And so here we are today on the show. Well, let me tell you a little bit about who we're going to be talking to, then I'll introduce him to you. Brian Head is the founder of Head Start Equity. It's a real estate private equity firm that provides passive investment opportunities for people mostly in the multifamily arena. So if you're in the multifamily apartments, this is a guy that you want to listen to. He has 20 plus years of experience in investing in real estate, 10 of which were as a licensed investment advisor and stockbroker. If you want to look him up later, I'm going to give you his website again later, but it's headstartequity.com. Brian Head, welcome to the root of all success.
Thanks, Jason. It's an honor to be on. I appreciate you having me on.
Well, I'm glad you're here too. I want to talk a little bit about your success in 2 decades in investing, but why did you decide to get into investing to begin with? What was it about that said, hey, I want to park my money in a building somewhere and make some money, cash flow off of that?
Yeah, so really investing in general started with me back in high school. I had an economics teacher that had us start tracking stocks in the newspaper. And that was kind of what planted the seed for investing in general. And then once I graduated high school, started going to the library, checking out books, dating myself here a little bit. We don't really do that much anymore now, but and so that was kind of my first experience. And so that's why I got into investment advising and being a stockbroker originally, and then found the value in real estate. Basically moved out of my parents' house. I got a little HUD foreclosure, a little 3-bedroom, 2-bath. Put a little bit of work into it and rented out one of the rooms to my coworker from day one. And so did a little bit of what's called house hacking there, and really discovered the value of real estate at that point. And then just been investing, like you said, in real estate for over 20 years now. Started out in single family. A few years ago is when I got into the multifamily space, decided it was easier to scale at the larger properties like that.
So who was the teacher in high school? What was his or her name?
Oh my gosh. Now you're putting me on the spot. I'm trying to remember what, I can't, he was the coach of the basketball team. And it's funny, I can't remember his name, but what I do remember is that, I came from a small 3A school here in Texas in San Antonio. And I remember that he coached against Shaq, because Shaq went to Cole High School here in San Antonio. And so I've got some old school videos of Shaq playing against my high school. So I was not playing against him. It was a couple of years before me. But gosh, I can't remember his name now. But
you got to remember that guy's name, because all of us have these people in our past that have a huge part of our story that sometimes we don't think about until somebody else positions it. And that happened for me. I was on a podcast recently, and a guy was asking, and it happened to be a coach too. And I did remember his name, but this guy was a jerk. He was always a jerk to me. He was a jerk to other players. He was just a bully as an adult. towards kids. And I always looked at him with disdain and displeasure. But in the course of that podcast, I realized that, he helped me become partly who I am today, because I knew I would never be like that. I would never be like this guy. So perhaps I need to reach out to him and say, hey, thanks for being a butthole, because that made me sure I was never going to be one.
Well, it's funny you say that, and just real quick, one of the other things that got me into investing too is kind of learning what not to do from my parents, because I love my parents to death. My father is one of the most amazing people, would bend over backwards for anybody, complete strangers and everything, and a hard worker, but just horrible with money. And so I kind of learned what not to do from a financial standpoint from my parents a little bit too.
Isn't it interesting that you can agree or disagree, but I think you probably will, is that we as entrepreneurs, as business owners, we end up, and in life in general, is we end up learning more through failure than we do success. Isn't that interesting? What do you think about that?
I would agree 100% with you. And I think part of that probably is because the feeling of success, it feels great, but the pain that you feel from failure sticks, I think, a little bit sticks with you better. And I think you don't want to repeat the pain that you feel from failure more than you want to repeat the great feelings of success. That would be what I've experienced anyway.
Yeah, it is interesting though, because I don't know who said something along the lines of, you're the when the pain of staying the same is greater than the pain of change, that's when change happens. And so sometimes the pain of going through that failure is what motivates us to change, to do something positive. But I think you're right. I think most humans are more motivated by the aversion to pain than the attraction of pleasure. And I don't know if that's true or not. It just seems true, especially as an entrepreneur, because, I look at what this coach did to me and how much of a jerk and a bully he was. And not that it made me who I am specifically, but it definitely encouraged me not to be that type of teacher. And I became a teacher and a coach just like him. And I had a very different relationship with my students. And your story about looking at your parents and their inability to manage finances, and you're like, hey, I'm never going to do that. So now you said that you got into investing partly because of what you learned from that person that you don't remember their name, Coach so-and-so. But you're going to remember that later. You're going to figure out who that is.
I know. Now I'm going to look it up.
I remember I had a lady, it was Miss Perkins. She was our economics teacher in high school, and she did the stock club. We had a stock club and traded. It never did anything for me, but that's just different strokes for different folks.
Yeah.
But so what is it about getting in this?
I remember his name now. Sorry.
Oh, what is it? Yeah, what is it?
Coach Zimmerman. Yeah, that was his name.
Coach Z.
Yep.
Coach Z. All right. All
Yep.
right. Well, if you're listening, Coach Zimmerman, you're still out there. Look what you did. You created this amazingly successful investor, Brian Head. What is it about the stock market that made you interested to get in investing? I mean, I've had stocks in the past. I'm 100% out of the stock market now personally, but what was it about that interested you?
I don't know if it was honestly, I don't know if initially it was some of the glamorization of that whole industry and everything associated with that. But I think it was something that other than being exposed to in high school, I didn't have a lot of knowledge about. And I think, again, going back to kind of my parents and learning kind of what not to do from their experience, I think it's one of the ways that most of us think of initially when it comes to building wealth. Oddly enough, I think real estate is one of the best ways to build wealth. But I think that because we see so many commercials and we're inundated with the stock market and all that stuff, and you hear a lot more about it in high school and college than you do real estate, that's just one of the first things you naturally will gravitate towards. And I think that was just the case for me. And I loved it. I loved my time as a stockbroker. It was a ton of fun. I learned so much. I also learned that, you think when you get into something like that, you can think you know more than you do. And I lost my fair share of money in the stock market. So
my apprentice, his name is Justin. He's 21 and he's very, very much interested in stocks. He loves day trading and he's that's his thing. It's what he wants to do. And I can't help him in that at all. Cause it's like, I don't know that world. I don't understand it. but I like you, I am much more interested in real estate than I am in stocks. That being said, it seems to me, and you tell me if I'm right or not, and the listeners I think would probably, some of the people are going to be on my side because they don't understand it like me. It seems to me that it would be easier to open up a stock brokerage account and just drop money in and just, okay, it's done. Go to E-Trade or Merrill Lynch or Charles Schwab or whoever, and just say, here's 20 grand, do something with it.
Right.
Than going and hunting down a multifamily apartment building and investing $1 million or $800,000 or $20 million, whatever it is, to buy it for cash flow. Am I wrong? Is it easier, or is it just perceived as easier?
I think it's perceived as easier. I think in some ways it is easier, but I think that's just because of, again, just because it's always in front of us, commercials and everything like that, right? And the reality of it is, though, I created a real estate fund that is, just like a mutual fund, but it's basically I'm investing in multiple apartment buildings within my fund. Investors invest in the fund just like you would a mutual fund, completely passive, no work on there, and they're not having to go do any due diligence on the apartments, due diligence on the operators of the deals or anything like that. So it really is literally just wiring money in and you're done. There's really nothing else that you have to do from that perspective. So I think it's just it's there's so many different ways to invest in real estate. I think a lot of times people mostly think of the active side of it, and buying a single family house to flip or to have as a rental, or having to go and find an apartment building and things like that. There's ways to do it passively, just like you would in the stock market.
So what is the secret to being successful in real estate investing?
I think I don't think it's unique to real estate, but I think just educating yourself. I think that's where a lot of people tend to try to shortcut things. I think it's good to trust people and to, believe, if you find the right person, to believe in them and everything. But I think you should take anything anybody says, whether it's a financial advisor or it's somebody like myself in real estate. You take it with a grain of salt, and you still need to educate yourself. I don't think you should be investing without going and listening to podcasts or reading some books or looking online, to educate yourself. I think education is still the most important thing. I don't think that's obviously not unique to real estate, but I think to be successful, that's one of the things you have to do.
So education is one of the secrets. Now, where would one get educated? Is it just listening to podcasts, reading books, or are there courses that you recommend? Where would we get educated to get involved in real estate investing?
Yeah, so it's kind of funny you mentioned that. So I am in the process of actually creating a coaching program to get into real estate, to help folks that want to get in, but they're not sure which avenue to go down. Do I want to get into single families? And if I get into single families, do I want to flip? Do I want to have rentals? Do I want to do Airbnb? Do I want to get into multifamily? There's a lot of different avenues you can go, and then you can be active or you can be passive, where you're just investing with somebody else and their track record and everything. So coaching programs are one way. There's a lot of them out there, and I've joined quite a few of them, and there's some good ones and some bad ones. So I'm trying to kind of take the good parts of some of the ones I've been a part of, and we're going to be implementing that in our program with some other coaches that I'm working with. So that's one way. Also, local meetups are a great way to meet people that are actually doing deals. I think just like anything else, to be successful, you need to be around people doing it. And you want to be kind of the dumbest one in the room, right? That's if you're going to learn, that's the best way to learn. And don't be afraid of that. That's actually what you should seek. You should look for those opportunities to get around people and be uncomfortable, that you don't have the experience, but they do.
So I had a mentor one time that told me, he said, listen, if you're the smartest person in the room, you're in the wrong room. And I don't think I'd ever heard that before, because I think most of us, we try to be the smartest person in the room. We want to be the smartest person in the room, which I think is a good thing to want, because that means we know stuff and we have abilities, and we want to be known for that. But if we're going to grow, we've got to be in different rooms. And you said the opposite, which is be the dumbest person in the room. Like we've got to, you're going to be the average of the 5 people that you hang out with the most.
Exactly.
So who do you want to be? Like if you're hanging out with people that are playing at a much lower game than you, and you're playing the high game, well, they're going to drag you down, or the likelihood is they could drag you down. You want to get in a room where the other 4 guys are playing at a much higher level, and it draws you up. Do you have an experience or a story you could share where that happened to you, where you got in a room, and you're like, holy crap, this is taking me to the next level?
Yeah, so it was a local mastermind group that I joined here in San Antonio, and I was able to get in a room with people that were buying these 100+ unit apartment complexes. And for me, it had always been I had always thought it would be a great way to build wealth and to invest, but I was like, well, I don't have $5-10 million to put a down payment on this $30,000 apartment complex. And so it kind of just stopped there. And so once I joined this group, and I can tell you in a minute kind of what the impetus was for joining that group. I had a personal life event take place that actually kind of put me into that situation. But joining that group was critical because, like we were saying, I was in a room with people that were actually doing these big deals, and it helped take away some of that fear and trepidation of being able to do this and partnering with people that have experience in doing those type of things. And so that was kind of the game changer for me.
How long ago was that?
That was about 3 years ago.
So 3 years ago, you got into that room, and I think you said early on in our conversation that 2 years ago you made the big switch from single family to multifamily. Am I getting the timeline
Yeah,
right?
roughly. Yeah, 2 to 3 years ago. Yeah, when I joined that group, I actually started acting pretty quickly. I started partnering on these apartment buildings within months of joining the group, so I got pretty active pretty quickly.
Well, let's break that down, because I confess my sins of inactivity, of inaction, of lack of taking action. Is that I hosted at my office building a multifamily meetup monthly with another guy. He was the expert. He came in, and I just used the space. He used my space to do this, and we had, I don't know, we had 12 to 40 people at any given month show up, and we'd do education on multifamily, because I had been listening to podcasts and reading books, and I really wanted to get into multifamily. Well, ask me how many doors I own today. It's like 1, and it's a short-term rental. It has nothing to do with multifamily.
Right.
Well, I didn't take action. And I think it's partly because I didn't have the right education, even though I was in the right spot to get it. But also I was afraid, like, okay, if I take this 50 grand or whatever, and I go into this fund, because I don't have to put all of the money in,
Mhm.
what's going to happen? So walk me through. And I know the listeners are probably going to think the same things. Like, okay, if I want to get in the multifamily game, how much money does it take? What should I expect? How do I wade in? Do I jump in both feet? What do I do?
Let's take a quick break to thank our amazing sponsors for making this podcast possible.
As an entrepreneur, I know that you have to deal with sales on a regular basis. I mean, every entrepreneur does. And if you aren't paying attention to sales as an entrepreneur, you're not going to be an entrepreneur for very long. But I've got a sponsor of this show called Dub that helps you bring the personal back to sales. If you want to figure out how to improve content creation, improve client trust, improve your sales process, decrease the sales cycle, because we all know time kills deals. If you want to increase client bookings and increase conversions, you need to take a look at Dub. There's a special offer for Dub for listeners to The Root of All Success at therealjasonduncan.com/Dub. And that's DUBB. What Dub does, I've been using this for years. I'm a huge fan, and I'm so honored that they're our primary sponsor of the podcast. But they have helped over 60,000 businesses around the world communicate better, to make sales easier, to make sales more personal. And Dub is built for growing teams. I mean, you can set up video emails, you can set up custom onboarding, you can do admin reporting, anything you need around video and sales and automation. Dub is there. You can try Dub now. Your conversions to sales are waiting. All you got to do is go to therealjasonduncan.com/Dub. And there you're going to get 2 weeks for free to try Dub. Plus, you're going to get 50% off your first 2 months of Dub. You can't beat that. So go check it out. go to therealjasonduncan.com/dub.
Thanks for listening to our sponsors. Now, back to the show.
Yeah. So really one of the most important things, and this is not to, I'm not trying to assume anything based on who you were around at that time or anything, but is finding somebody that you know, like, and trust, so you can do the education piece, and that's super important, but you've also got to find somebody that you really believe knows what they're doing and has good character and is going to take put you in front of them. They're going to have your interest first. And those are super important things to have. You've got to feel that to be able to pull the trigger. I think also it's one thing to kind of learn about it, it's another thing to take that leap, right? I remember, and I'll just real quick, I'll just say this one story. When I first got started in real estate, it was doing a single family flip, and I had, like yourself, I had read all the books. I'd done everything. I'd looked at I don't know how many houses, and I was standing in front of this house on the front porch with my real estate agent, and I was him hawing about whether I was going to do it or not, and he was like, "Look, man, you're at a paralysis by analysis point right now. You've just got to do it." And that, had I not done that, I wouldn't be where I am today. I think I made like $800 on that property. I didn't have a contractor lined up or anything. I actually went to the neighbor next door, asked them if they had a contractor. They had a buddy that did it, and I used him, and way over improved on the property. Spent way too much, still, but for an education, I actually made money on an education. So that was pretty cool. But that was the biggest thing. I think that's one of the biggest things, is just getting over that hump and getting past that fear.
So when you did that, so how let's talk money, if you don't mind. Like, how much money did you put into that deal?
So, and that one it was interesting. I bought that with a regular 30-year mortgage, which is not typically the type of loan you would get when you're buying a house to flip. Usually it would be like a hard money loan or something like that. But again, I didn't really know what I was doing. I just went for it. So I did, typical down payment. I think it was like $10,000-$15,000 on the down payment, because this was back in 03, 04. So houses were a lot cheaper back then. And so, and then I probably put in about 30 grand into the rehab, which back then was quite a bit of money. And so I over improved it, just simple things like, a little bit of dripping right on the crown molding or on the trim or something, just being really, really super picky. And so, replacing all the outlets to white, really didn't need to be done. Just simple things that I learned later that I didn't need to do. But so it was, I guess it was about a, $70,000 purchase price, about 10 to 15 down payment, and then about 30 grand in rehab costs.
All right. So you had 50 grand into this thing. You sold it. You made $800.
Yeah.
But you got this lesson. You're like, okay, so what did you do next? Because you did single families for a long time before you flipped. So you did a bunch of these fix and flips. Is that what you did in single family, or did you buy and hold for rental?
I did both. So I did both. Yeah. And I was doing it concurrently. So I was buying single family. Basically what I was looking for in a single family rental is and this was back, I really got heavy into it back in right around 08, when there was a lot of opportunities. And so at that point I was like, well, I want equity and cash flow from day one. That was my criteria. And so I did that, but I also only went with the rentals if it was very minor, just maybe like carpet and paint, right? So I didn't have to put that much money into it. The flips were a little bit heavier, maybe replacing cabinets, putting in ceramic flooring, things like that. So that was kind of, but once I did that flip, then I went into the next one and I used cash, and actually it was in that exact same neighborhood, went and bought another one. So I did about 3 deals in that neighborhood.
So your first deal, you had to put 50,000 of cash into it, but by the third deal, you had made enough profit to just do cash. Is that what you're saying?
I was also taking loans for my 401k as well,
Okay.
because and I had a good job, like I said, at the time, and so I was able to make those. I don't necessarily suggest that for people unless you can make those payments outside of what you're doing, right? But yeah, so I used different tactics, and then later on in my flipping, I started finding investors that wanted to passively invest in the flips and things like that as well.
Okay. Now you move into multifamily. you're in multifamily now. That's what you're doing. You're setting up a fund for people to invest in multifamily.
Mhm.
Why multifamily as opposed to single family?
It is easier to scale. So, and you're a lot more concentrated in terms of property management and things like that. So property management is really cheaper on a multifamily property than it would be on a single family property. And it's just a lot more easier to scale, I think, is the biggest thing. And there's actually better opportunities from a passive standpoint in multifamily, I think, than what you're going to get in single family from a passive standpoint.
Yeah, well, and as illustrated by the fact that you've got a fund. So, you don't have to get into the details, but like from a high level, how does that fund work? You just say, look, I'll take tranches of 10 grand, 15 grand, 20 grand, 50, 100 grand. What is it? And then you buy this apartment complex, and then you do quarterly distributions. How does that work?
Sure. Yeah. So actually, my fund is set up to where the fund is investing passively in other people's deals. So I'm not actually a partner on the deal. I actually specifically chose to do it that way for a couple of reasons. One, if I was limited to deals where I had to be a partner on the deal, that reduces the number of deals that I could potentially get involved in, right? If I need to be a partner, most of the deals that are out there, most of the multifamily operators that are doing these deals, get the ones that get the first dibs on the good deals are ones that have a lot of experience, a lot of capital. They've been doing this for a while. Those are the ones that I wanted to invest with. I didn't want to invest with somebody that's doing the first, second, third deal. They've never gone full cycle on a deal, meaning they never bought and sold an apartment complex. I changed my criteria because I've been a partner on 8 different multifamily deals, but I learned a ton with everything that's happened over the last couple of years. And I've taken all those lessons that I've learned and implemented some pretty stringent due diligence that I go through with my fund. And so that's what I'm kind of focusing on in the fund. It's all in Texas. To answer your original question, originally it was 50,000 was the minimum, but I've had some changes in my fund. So I'm actually able to take considerably less than that. I could even do 10, 15, 20 grand in the fund. It is open only to accredited investors. But it's actually a pretty sweet deal in the fund. I can talk a little bit more about that if you want.
Yeah, well, I think it's interesting because if we're looking at how to succeed in real estate investing, we're looking at these secrets that you're giving us on how to do this. If someone says, "Look, I don't have a lot of money. I got 10 grand, I got 15 grand, I got 20 grand that I can drop into something," and they say, "Okay, I'm going to go to Head Start Equity. I'm going to work with Brian Head and his team. I'm going to put this, let's call it 10 grand, just at the very low end. I'm going to
Mhm.
put this 10 grand in there." What type of expectation should one have? Not necessarily in your fund, but because I know this is not a pitch for what you're doing. I'm genuinely asking questions that I'm interested in. But like, how would that work? What are the expectations for me as an investor doing that?
Yeah, and I don't mind going specifically on my fund because there are a lot of different expectations you can have on different funds, and everybody has them set up different ways. So with my fund, because it's my first fund, I actually set it up very favorable toward the investors. I have a 1% capped at 1% administration fee simply to cover my costs on the fund because I have a third party fund administrator. There's an investment portal, all these things that investors get, and so that fee is meant to cover my expenses. That's it. I actually am not making anything personally on the fund. The only thing I'm making is the money that I've actually invested alongside my partners in the fund, my investors in the fund. That's the only thing I'm making money on in this first fund. So there's no equity split, there's no hurdles, there's no preferred return because it's all going back to the investors minus that 1% fee. In terms of expectations, I have monthly distributions. So I've been doing the monthly distributions for about 9 months consecutively now, and projected returns. And I can speak to this because it is only open to accredited investors, but 15, 20%, somewhere in that range is what we're looking at on an annualized basis. Again, that's just projections. That's based, the deals I'm investing in, that's the projections on those deals. And so that's kind of my target range. I will say it's not meant to be a cash flow play. So somebody looking to get big monthly distributions, that's not what this is for. This is more of a growth investment. And the plan is to hold the fund for about 5 to 7 years.
Okay, so 5 to 7 years, we've got a little bit of cash flow coming in every single month. 15 to 20% is nothing to wink at, so it's not bad. You're getting 15 to 20% back annually on your investment, but 5 to 7 years later, Is it refi? Is it a refi play where we pull a bunch of cash and give it to the investors, or is it a sale and you take the distribution off the sale?
So yeah, so when basically I'm going to be investing in multiple deals, and so as each one of those deals sells, the investors will get their return of capital plus any profits from those deals. And when the last deal is sold, I'll be returning the final principal investment plus the profits on that, and then be closing out the fund. I don't have control over the individual deals that I'm investing in. So could they be refinanced and do a cash out and things like that? That is possible. But all of the deals I'm investing in have a 5 to 7 year projected return as well. I'm sorry, projected time period as well. And so that's what my fund is structured after also. As you may
So,
know, go ahead, sorry.
well, so is your deal set up to where you got a third party that's offering the deal? So you're
Mhm.
just going out and finding accredited investors who want to participate, and so are you just taking all that money as one lump sum? So you get X number of dollars from each individual person. You end up with 500,000, for example, and you
Mhm.
go to that third party and say, "Hey, I've got this Head Start equity fund. It's $500,000. Boom, we're going to invest as a group." Is that how that's working?
Exactly.
Oh,
Yep.
okay, cool.
Yep. 100%.
Very, very good. All right. Well, so you've been successful in real estate. Obviously, that's why we're having this conversation on the root of all success. What would you say, Brian, is your one key to success? If you had to look back at all the ways that you've been successful, what's the one thing that's allowed you to become successful?
I would say determination. Um, I know we talked a little bit earlier about, you know, hard lessons to learn, failures, things like that. And I think that I've had a ton of those over the years, and that's a good thing, because if you're not failing, you're not succeeding, right? I mean, you have to fail in order to move forward. And one of the things over the last few years specifically that I've learned is how important it is to go outside of your comfort zone. Being on podcasts and stuff was something I would have never done when I was working in my corporate job. And
Yeah.
what I learned is that part of the reason for that is because I really want to do what I'm doing now. I'd gotten to a point in my corporate job where I didn't really want to be there anymore. And when you have a passion for something, and when you're really going after something, you're willing to go outside of your comfort zone more easily than when you're not happy and not comfortable with what you're doing. And so that was one of the biggest things. I think just being determined, and just looking at each failure as a learning lesson and moving forward. I think that's been the biggest thing for me, because I've had plenty of failures over the last couple of years. So
So how do you define success then? What does that word success mean to you, Brian?
I really think the word success to me means being happy where you are. It doesn't mean you don't drive for more, and you don't have that inner desire to continue to progress and do bigger things and make more money and things like that. That doesn't mean you don't have that. But I think it's true, and I'm sure some folks have heard that before. You need to be happy where you are now. And I think that's, and I'll go back real quick to that life event that I mentioned earlier. And that's kind of one of the biggest things that changed my perspective. So real quick, back in 2018, my wife was diagnosed with breast cancer,
Mm.
and she is, thankfully she is cancer free now. But that was a huge kind of turning point in our lives, and really made us both step back and reflect on where we were in life, where we wanted, how we wanted to move forward, where we wanted to be in the future. And one of the things that really brought home was, life is short. And you hear that all the time, but until you really experience something like that, and the thought of, potentially raising your kids without their mother and your wife, I'm getting goosebumps just thinking about it. Those things really change you in ways that hearing about and having people tell you life is short, it doesn't really do it justice, right? So
Yeah, well, it's kind of I praise God that she's fine. That's
thank you.
awesome. I'm glad to hear that story turned out well. But it isn't interesting, like the theme we're talking about, like sometimes the bad things that happen end up making us better. And so obviously you would never want to have to go through that situation again. But the recalibration that it set for you and your family especially you and your wife and what you think about what's important.
Hmm.
You couldn't trade that. You can trade that for anything. So praise God that she's good. I'm glad that she's fine. And how
Thank you.
many kids do you guys have?
Two. We have two daughters. One is 6, and one's getting ready to be 13. So yeah,
Oh, wow.
yeah,
All right. So, well, based on your definition, being happy where you are, do you consider yourself to be successful?
I do. I do. Yeah, for sure. Again, it doesn't mean I'm not resting on my laurels, and I'm, you know, it, you can be happy where you are and want more. That
Sure.
both can be true, right? So yeah.
Yeah, I think about it like this. There's complacency, which is, hey, I'm good and I want nothing else. That's complacent. There's contentment, which is, hey, I'm good, but there's other things. So I think complacency and contentment get confused. I think
Mhm.
people think that if I'm content where I am and I don't have these huge ambitions, that I'm complacent. Well, no, I'm content. I get it. I'm good. I'm not complacent. That's a completely different thing. So I like that distinction, and I think you just illustrated that very much. So, final question for you on the official question on the show is this: if you could look at an entrepreneur right now who's watching this show or listening to this show and give him or her a piece of advice, a single piece of advice, and it can't be determination because you've already said that, but if you could give a single piece of advice of how to be successful, like what they should do, what would you say?
Well, it's kind of related to determination, but I would say, take those failures as learning lessons, and don't look at it like, well, okay, this just isn't going to work. I have to give up, right? I think it's important to take those failures as learning lessons and just tell yourself, okay, I'm just don't dwell on it too much. Just think, okay, this happened. What can I do differently? Learn from that, and then move forward, and just don't dwell on the negative things.
Yeah, I love it. That's great advice. Well, Brian, I want to tell everybody how to get in touch with you. Your website is headstartequity.com. Head Start Equity. You can look them up on LinkedIn, Brian Head at Head Start Equity. Is there anything else you want to have for people to get in touch with you, or is that the best way?
No, I think that's the best way. Yeah.
All right. Now, one last curiosity question, because I happen to know you are very much into whiskey, and you're going to be doing a new show that you said you didn't technically want to talk about. So we won't talk about the new show that's coming. But tell me a little bit about your favorite whiskey. I think this would be a good place for us to end today, because we both are whiskey guys. We like whiskey. So what's your favorite?
I think my favorite actually is the Knob Creek Rye, and I'd like to drink it neat. I don't know. It's a nice smooth whiskey. I honestly, I'm still learning the whole notes thing. I need to drink more whiskey so that I can get better at picking up all the notes and all those. You hear all those people talk about that stuff, so I'm still trying to get better at some of that. But that's probably my favorite one.
So you're a big rye guy generally?
Not generally, no. That's why it's surprising that I ended up liking that one. I actually tried that one a few months ago for the first time, and it just stuck with me. And so, no, I'm not generally a rye guy, but that one stuck with
Oh,
me. Yeah,
well, you know what, Brian, you've convinced me. I'm going to go buy a bottle of Knob Creek rye, because I don't like rye. I just generally don't drink them at all.
yeah.
It's not my thing. But if you, like me, are not a rye guy, and that's good, I'll go give it a shot. So thank you for that
Go for it.
that piece of advice, Brian. It's a pleasure to have you on the show. Thank you for sharing your wisdom with us today. I'm going to give you the last word before we sign off for today. So anything else you want to say, whatever, to the audience, what would you like to say?
Well, I guess as Jimmy V would say, don't give up. Don't ever give up.
I love it. Well, Brian, thanks for being on the show, man. It's been a pleasure.
Thanks, Jason.
All right, there you have it. Another successful entrepreneur about his journey through learning from his failures. And I think that's kind of been the theme of this show, hasn't it? About we have to learn from our failures, and his one key to success being determination. That is tied in with who we are. So wherever you are right now, Mr. or Mrs. Listener, wherever you are, whatever struggle you've been going through, know that there is something better on the other side. As Napoleon Hill said, in every heartache, in every setback, in every failure, there is the seed of an equivalent or a greater benefit. So look for that seed, and don't expect that seed to be a full-grown tree tomorrow, because a seed takes a long time to germinate and to grow into what it will eventually be. So, Brian and his family, as he shared, went through a terrible life ordeal with his wife. He's also made some bad investments. He's done some bad things in the past. I've done that too. I've gone through some bad times and I've made some bad decisions and bad things have happened. But it's through those failures that we become who we are, the man or the woman that we are designed to be. So embrace it. Listen, nobody wants it, but embrace the suck, embrace the hell that you're going through, push through, because one day you'll look back and maybe you won't be glad you went through it, but you'll be glad for what you learned as a result of it. So thank you for listening to this show. This is The Root of All Success. I am the real Jason Duncan, and it's a pleasure to have you as a listener, as a subscriber. Please leave a review if you like shows like this. It makes it better for us as podcasters because more people get to see us with the more reviews that we have out there. So thank you. And if you're not watching this on YouTube, make sure you go over to my YouTube channel at The Real Jason Duncan on YouTube and check it out. Well, tune in again next week when I talk with yet another very successful entrepreneur about his or her journey to success. Until then, I am the real Jason Duncan. And as always, Jesus is King.
Attention business owners. Attention business owners. Feeling burnout from running your business? Uncertain if you're nearing burnout? Take our free 10-question business burnout test at businessburnouttest.com to discover where you stand. With just 10 quick questions, you'll learn how to immediately begin making changes to regain freedom and success. Cut your daily operations time in half. Improve your quality of life and prepare your business for your future exit without losing revenue or profit. Visit businessburnouttest.com now and take the test. Thank you for listening to another edition of The Root of All Success with the real Jason Duncan. If you've enjoyed this week's episode, visit therootofallsuccess.com to access the show notes and other helpful resources. Follow Jason on social media at The Real Jason Duncan. See you again next time here on The Root of All Success.